Good afternoon, everyone. Welcome to Hit the Bid here on February 1st. This is Ty Robbie here with your Week 5 Market Watch. Today we're going to run through our charts and see what happened across the markets over the last week and see what we can look forward to as we head into Week 5. So let's jump in and get started. First on the board, we got our April live cattle as always. We did see a pretty choppy week in the live cattle market last week. Prices balancing out here between $235 and $240, hanging out right up here near the current year's high and continuing to hold these higher prices after the rally off that Thanksgiving week low. This market continues to trade up here in bullish territory, seeing good support at our major moving averages and as they're continuing to climb. This market did just see some choppy action all week long. Nice D-shaped profile here showing good distribution of volume across this whole range we traded in for the last 5 days. Market seeing good support down here between 236 and 237. Each time we had some pretty quick sell-offs down into this area, it was bought up, and the bulls continued to defend that line. Weekly low came in on Wednesday with a test of that 235.60 level, prior week support line. Breakout line here acting as good support midweek, and all week long we did continue to see good buying activity down here between about 235.5 and 237. We expect to see this action continue into next week. We want to see the bulls continue to hold this market above that 20-day moving average and keep buying this thing up. We should see this thing see some early support next week and continue pushing back up here towards 240. We need to get above last week's high here to really get this thing to push up there towards that gap. But our bull pivot will remain 237 here for the week ahead. Look for bids above that to push us up here towards 240, and above that should see a pretty smooth sailing up towards that gap that was created back here in mid-October. That should be target one for the bulls as we continue to get more upside. However, if we do see this market break down here below last week's low at 235.60, look for it to flush down here and try and test that 50-day moving average. We still have good support all the way down here to about 231.25, which is going to be our prior month lows. January low coming in here at 231.27, trading just below that 50-day moving average here. But this should act as a good support line, as it has been support and prior resistance here over the last about 6 months. We should see that line continue to hold this market above it. If we do get some offers down here below 235.60, we could see this thing flush down here, try and find support down there in the low 230s and at that 50-day moving average. We should see the buyers wake up and have some pretty good dip buying opportunities if we do get down into this area. But that's only if we get those offers early below 235.60. If this market continues to push early above 237, we should see this uptrend just keep on pushing higher, and this cattle market still remains in good bullish territory, and we should see that upside continue here as we move into the month of February. Over here next, we got our March feeders on the board. Last week we did have some early upside as this market did rally up there into a new yearly high of the year, coming in just shy of 368. Coming in at on Thursdays during Thursday's trade. We did see a big sell-off here on Friday as this market was just kind of coming off of some overbought levels, coming right back down here towards our bull pivot at 360. We have seen good support all the way down here between 353 and 360 over the last couple weeks. We expect to see that continue. Rising 20-day moving average coming up into this area should bring some buyers with it, and we should see good buyer support down here in this area as we head into week 5. Bulls want to really defend this 353 line. That's going to be the breaking point here for this market. If we do get down here and get to offers below 353, we could see a flush down here into 347 and even test this yearly opening range low. But we should see good buyer support anywhere around in this area. This market remains to show really good relative strength. Feeders are continuing to push and still trading above our major moving averages. We should continue to see good buyer support, and this mark should start to head back up. We got real close to that 370 mark, and we're not far off from that overhead gap here that caused this breakdown back in mid-October. That should be the next target here for the bulls. Look for them to offer some good support early this week and turn this market back up. We're going to start heading towards that gap, and then from there should be pretty smooth sailing on up into new all-time highs for this cattle market. Look for those feeders to continue to lead the charge here, as that has been where the relative strength is. Look for good buyer support early this week. We want to make sure that they continue to defend these lines here at 353 on those feeders and down here at 231.25 on those fats. But in between there, we should see some good buyer support from the bulls in this cattle market. We've got a good uptrend still shaping up here, and we should see more upside continue as we head into the month of February. Next up, we got our March corn futures on the board. This market had a pretty choppy week as well, as we did see it coming off of these oversold levels down here in the 415 to 420 area. This market rallying back up here and seeing a pretty choppy week. Early downside, rallying up here and seeing some rejection up there at that 20-day moving average. We do have this overhead supply zone still acting as good resistance, lining up with our major moving averages. Prior range lows at 435 continue to be the line in the sand for this market. As long as we continue to trade down here below 435, we are still in bearish territory, and we should see the sellers continue to get aggressive here and try and push this market lower. If we do somehow get some bids back up here above 435, that'll send us right back up into this range and keep that range trade alive. But in the meantime, we are seeing some good resistance, some good pushback from the bears here around our declining averages and in this prior supply zone. We should see that downside continue here as we head into week 5. Look for early bids below 428 to keep carrying this market lower. Pretty slow drift down here towards these prior swing lows at 416, 417 should be the first target. And if we do continue to flush down there below that, this market should head on down to new contract lows and start sniffing out that $4 mark. Look for that resistance continue to hold up here in the 430 to 435 area during the week ahead. Sellers should continue to keep some pressure on this market and try and drive it back down into the low $4 range. Crude oil prices continuing with their rally last week. Nice gains here, rallying up from $60 all the way up to 66.5. We did see this market get above that 200-day moving average early last week, and from there it's pretty smooth sailing for the bulls, driving right up here towards these prior swing highs. This was the next target for the bulls here. Pretty big wide range day here on Friday, kind of chopping back here between 66 and undercutting 64. We are in bullish territory here at the moment. We still expect to see some resistance up here around these prior swing highs at 66.5. However, if we do get some early bids above it, we should see it start to snap up there into the high 60s and potentially start targeting $70, which was going to be this high back here in late July. That's going to be how we're going to be playing this crude oil market from here, is just level to level. We've got a lot of them to trade around. The lines are a little bit blurry, but we have good lines nonetheless. If we do get above 66.5, look for it to get marked up here towards these prior highs. But we are trading in bullish territory as we are above all of our major moving averages. Look for these 20 and 50-day averages to keep climbing up here and potentially act as support if we do get a pullback from here. But in the meantime, we should see this thing continue to keep on pushing higher. We've got some really good buying momentum here from the bulls, and we should see this market continue to keep on pushing up there into the high 60s. We do have a pretty big wide range here for the week ahead for our pivot points. If we do get back down here below 62.36, which was that prior month's high that came in here on the 14th of January, breakdowns below that should push us back down into the sticky spot that and keep this market trading around $60. But in the meantime, we should see good buyer support down here towards 63 to 64 bucks and keep this crude oil market drifting higher. And next up, another choppy week in the equity markets as well. Indexes continuing to just stay sticky up here around these all-time highs. We did see some nice rallies to start off last week. Prices opening up with a gap lower on the Sunday night futures open, but that was immediately bought back up, and we did see pretty strong rally here throughout the first 3 days of the week. NASDAQ and the S&P both driving higher throughout Monday, Tuesday, and Wednesday's action, putting in the high of the week here. On Wednesday, NASDAQ coming close, only about 50 points off of that all-time high. We did see a new all-time high print on the S&P futures here during the overnight session, up at 70.43, before we did have that big sell-off there on Thursday. Most of Friday's action was contained, well, all of Friday's action was contained to that Thursday's range. We did see good buyer support in this Dow index down here near that 50-day moving average. Good pushback off of those lows here into the close, finishing up there just shy of 49,000. We should continue to see good buyer support here in the Dow and try and drive this market higher. The NASDAQ was the weakest of the bunch here on Friday, finishing just off of those lows, but still trading above our 50-day average. We should expect to see these choppy market conditions continue. We are still in bullish territory here and riding these, just having a nice slow drift higher on these rising moving averages. S&P coming back here off of those lows here on Friday as well. 69.70 remains the bull pivot. If we do get above that early this week, look for this thing to start drifting back up here towards those all-time highs. Nothing is breaking yet. We just got some pretty mixed conditions here. Large cap stocks all seeing some choppy action, some going down, some going up, so it's just kind of keeping these indexes nice and sticky up here around these levels. We aren't expecting any major breaks here at the moment. We could just see continued choppy action where we're at. Until we get some good follow through from the NASDAQ and some of these tech sectors, we're not really going to expect some real power trend type moves, but we still should see this market slowly drifting higher or continuing to chop up. This market has been a very selective market here currently. Certain sectors leading more than others, so it's a good time to be selective and stick with what is working in those relative strength stocks and get rid of those laggards that are dragging the portfolio down. In the meantime, we should just see some choppy conditions or a slow drift higher here until we can get some better participation from that tech sector. In the meantime, look for this market to keep on chopping up and stay pretty sticky in these areas with a nice slow drift higher. Not in real time to start getting too defensive here. If we do get some sustained trade down here below these 50-day moving averages and that last month's low, that'll be a time that we want to start getting defensive. But in the meantime, we should just see this market continue to trade here in this tight range we've been in. That's all we got for our market watch for this week. Thank you everyone for tuning in here today. We will catch you tomorrow night for closing comments. Have a good night.